Hello guys, welcome to the Trading Parrot. I'm observing a specific pattern here that is starting to turn my head towards a potential for a double bottom formation in the upcoming days on Bitcoin. Later today we have the core PPI and FOMC meeting as well, so we should be expecting some volatility in the market. I want to talk about this particular 4-hour pattern information that is still not confirmed, and we definitely need to talk about the daily, because this last leg up could turn into a dead cat bounce depending on what price we close later today. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And if you feel like supporting the channel, make sure that you watch this video until the very end and do not go anywhere without leaving a comment down below. Those two things are sending a very strong message to the YouTube algorithm that this content is worth watching by more people. So thanks for that. I'm gonna start with the pattern on the 4-hour. What we have here is a head and shoulders formation, and I can very clearly see the shape of the pattern on the RSI. Bitcoin tends to respect this head and shoulders formations. You can see that also on the daily we've been respecting this pattern pretty much on every peak of the last 6 months. But past performance doesn't guarantee the results, so we need to look into what is the point where this pattern becomes valid and what could invalidate this pattern. I'm gonna do both the analysis on the oscillator and then on the price as well to see how the different targets differ. On the 4-hour time frame, the neck is an ascending trend line, which at the moment is at 44.4. I will say if we break below 44 on the RSI 4-hour and we close a 4-hour candle below that level, let's say at 42 or 43, then the target will be 15 on the RSI. This target comes from the largest distance between the top of the head and the neck. Interestingly, that's where we came from when we had the crash of the VXY and the Japanese markets on Monday last week. And it wouldn't surprise me if it plays out, because it will end up printing some sort of double bottom formation on the 4-hour, which I think is healthy, because most of the people after exiting this area are feeling like we are out of the woods, that the problem is resolved, we have our crash, now we need to start going higher. Money printer has been activated. Of course, there's a point of invalidation in this pattern. We have a potential breakout that could play out above 54 on the RSI. So I will say if we get to 55, 56 and we close a 4-hour candle there, the likelihood of this head and shoulders playing out gets invalidated. Let's look at the same thing but now in the price. You can see that on the price is also clear that there is a head and shoulder formation. Of course, this is not a flat formation, it's an ascending one. And if we take the largest distance between the neck and the head and we place it in here, we get that the target is around 51.7k. That's slightly higher than the low that we made in here, where we actually went to 49.5. So ideally, if we wick to there and then we have a close higher than that, let's say we close at 55, respecting this low, the damage will be considered as mild. The daily as well is kind of supporting the idea of this breakdown at the moment as we approach the PPI meeting. During the meeting, there should be some volatility which could manipulate things, thinking that we're going to close down the day below the trend line just to finish the meeting and eventually recovering support, and the 4-hour candle coming in here and before closing the 4-hour being back above support just to continue going higher. And because of that, I'm gonna stick to the rule of waiting for candle close. Make sure that you follow me on Twitter. I'll be monitoring this pattern throughout the day. My handle is Trading Parrot. I can still see the formation of the head and shoulders on the daily, although it's a little bit more difficult to identify. And as I say, if we were able to hold support by the end of today, this will be the third day that we are right at support, and at sometimes we're below it and then we recover above it. Right now we are below it, but it's still early in the day, so there's around 11 hours left for this to tell us whether it's a breakdown or if this could potentially go and hit the highs of 56 on the daily. The highs of 56 on the daily have reduced in price to only 64.3 and is right below the resistance of this longer term trend line. On the 5 minutes on trading different, I can still see that the largest bucket of liquid is above 62.8 all the way to 63. And if we just focus on the lower end price, we have a bucket of liquidation levels at 57.5, one at 54, and there is not that much at the levels of the target that we were talking about. But if we go into the swing profile on Binance, you can see that the 51 is slightly above the area that we already took. And that leaves me a little bit confused, because if the target is just to come here and there's not enough liquidation levels there, what is the incentive to go there? Can this still play out? How much cash are they gonna get from this vacuuming here, really? And my main focus at the moment is, can the price get to 47.9 and take all the way to 45K with this single move from the head and shoulders? I'm gonna come back to the 4-hour time frame, and instead of looking at the target that we found from the price, which was 51.7, which we already confirmed there's not much liquidity there, what else do we have? We have the target from the RSI head and shoulders on the 4-hour. That target points to 15, which is the same 15 that we visited in the crash in the previous week. RSI 15 on the 4-hour, at the moment, it's in the price located at 45.2K. So if this was to break down right now, I will say that there is a chance that the RSI might be the one that is right, just because it coincides with an area of high motivation for the market maker to go there and grab that liquidation level. Now, remember, when you watch this video, don't think this is the 100% chances trade that I must take. Think about it as the pattern is bearish. There are some probabilities that it could break down, and there are some probabilities that we make it to 51.8 and potentially we go for 45K. All that needs to be treated as uncertainty, not as a guarantee. If you do treat things as a guarantee and you become a trader, you will end up with the account empty. An alternative to shorten this could be to buying a little bit if it breaks down at 51 and a larger chunk at 45K to 48K if we get there. If we never break down and we start going for the target of 64, this won't be an area to buy. The area to buy would have been to buy right now, when we are still testing support, if you have a strong conviction that today will end up as a bullish day. At the moment, I'm not fully clear on that, because we have that pattern and we are fooling around with that support, which we might lose at any minute. Guys, I'm hosting this position airdrop on Bybit. You trade with $100, they give you 500 additional to trade. There's a link at the top of the description that you need to use to activate this promotion. It comes with all the instructions on how to do that. You can use any of these coins to trade. I also leave you a referral link to open a new account on Bybit. If you use that referral link, you can claim up to 30,000 in rewards. Use your Bybit account with my referral link to claim 70% off any of the Trading Parrot subscriptions. If you already have a Bybit account, I left you instructions on how to transfer to my referral, and you can use a digital residence Palau card to trade on Bybit from pretty much anywhere in the world. See you in the next one. Bye bye.